Hey, it's Tim. It's 9:20 in the morning, and we're looking at emerging markets that are weaker with stronger dollar, despite the fact oil is holding up. And we remain in the middle of a holiday-filled week where volumes are low. Volatility is a little higher than it might normally be, and in fact, going into long weekends, especially in places like Russia, you're seeing profit taking this morning, which is exaggerating some moves downward. But overall, in Asia, India down 62 bips, Malaysia flat. South Korea down 38 bips. Taiwan remains closed into Central Europe. Russia coming back a little bit, was over 2% down, but now down 170 bips, despite the fact that oil is stronger. Turkey down almost 2% after a very good opening in the first in the morning market session. South Africa down 40 bips, and Brazil opening down 73. Chile down 26. So pretty good moves downward, despite the fact that currencies actually are a little stronger. Looking at the Dixie, you're continuing to see the upper end of the recent range tested, although we have come back again in the last hour. Finally, some reaction to weaker jobless claims in the U.S., which showed that certainly the consumer has very little reason to get excited in the States right now. Jobless recovery is, if anything, what we got. So watching those trends. But the other headlines, I think, relate to gold. IMF continues to be selling what is essentially the second half of the announced central bank sale back in April. To me, this is not about supply coming onto the market weighing down gold prices. This is about diversification into gold by central banks around the world, where there's a number of guys that are very much behind the curve. Notably, the largest, China, continues to seek ways to diversify. And all of the data this week on the China Treasury holdings and even FX reserves tells you that things are moving in the direction for more demand for gold. Otherwise, it remains following earnings. It remains following the direction of the euro, which continues to trade down. And watching emerging market currencies actually trade higher against the dollar. It's the dollar's strength against the majors that's putting a lot of pressure on markets. But again, things are pretty quiet here, and we're seeing a downward trade, but this is not a long-term direction.